index from the United States, and the key weekly unemployment claims. So, as I say, see what they come in like, given the massive miss we had for non-farm payrolls on Friday, that 266,000. Huge miss from expectations. The Fed and other central bankers have sort of been, quite understandably, saying, it's only one data point. It's a blip in the downward trend. Unemployment did go up, obviously back over that key 6% to 6.1%. So see what the weekly claims look like. Remember, last week we beat and came under the 500,000 level for weekly claims. First time we've done that since the pandemic started. So, as I say, see what the numbers come in like today. They're expected to slip a wee bit down again. 490,000 is what's expected. 487,000 some estimates, so not much in it really, from 498,000 last time. Somebody's saying there's no sound. Let me just check the sound is working. Settings, audio input, audio output. Let me just check that. Communications. Testing, 1, 2, 3. Can you hear me? I hope you can. Hope everyone's well. See if the audio's come back. Has the audio come back? Anybody? Hello, Neem. I hope you can hear me. Good afternoon to you. Can you hear me? Hope you can. I can't actually respond to you here, can I? Neem, hi. Neem, I think you've been here before, Neem, haven't you? So, as usual, anything you want me to have a look about, please let me know. And no sound. Right, now then, let's have a look. There's no sound, apparently. Right, settings. Let's have a look. Input. So it's not on mute. Microphone headset. Still no sound. Oh dear, that's not great, is it? Let's try. Still no sound. Again, settings on, restream. Let me just have a check. Yeah, checking all the settings. Oh my god. What to know about gold market, the advanced ones. Let's have a look. Advanced settings. Advanced settings. Echo cancellations on. Expressions on. Live stream. High resolution audio. Stereo audio input is pulling. No, I don't want to do that then. Echo cancellation. I don't want to do that. Oh dear. I wonder why that is not working. Can nobody hear you? Neem, you want to ask about gold? I understand that, but still no audio. Oh dearie me. Let's have a look. Video. This audio. Microphone, UBS headset, no, it's definitely the right audio. So Mary had a little out. Looks like it's working from here. Output. It's saying speakers. I don't want speakers, do I? Want. Still no sound. Dear, right. Mary had a little allowance. Please advise. No. Is it coming? Is it not coming? Let's have a look. Have a look at that. Hang on. Is it? Can you hear me? Can you hear me? Oh, doesn't look like it right now. Right, let's have have a look. 1, 2, 3. Right, hang on. It sounds like I can hear myself on Facebook somewhere. Yeah, sounds like the recording's actually happening. So, can you hear me, guys? Neem, I know you. Neem, can you actually hear me? There's some people saying they can't hear me. So, can you hear me? Type a message. Can you guys hear? Sounds like something's happening. Or is it? Settings. It's not just me talking, isn't it? Nobody's responded. I'm back. Apparently, I'm back. So, where was I? Well, we're still ahead of the data, so don't worry. We're back on. I don't know what's going on here, but the vagrancies of modern technology, but from my office at home. So hopefully you can. Right, what was I saying? I was basically, it's big day today. We've got the weekly claims. As normal, 490,000 is expected. Remember last week we broke under the key the 500,000 for the week. Weekly, or the 4 weekly average is expected to fall to 560,000. So obviously that's on the back of a very, very big miss for non-farm payrolls on Friday, 266,000. So Neem, let's have a look at gold then, if that's what you're interested in. Let's have a look at the gold market. Let's just share the gold chart. Let me bring it back. Where am I? Let's move me down. There's a gold chart. Gold chart today. Obviously, everything sold off very aggressively yesterday. This is gold on the 1 hour chart. You saw yesterday we were up at 1842 for sort of testing our weekly high here. We did it here on Friday, Monday, Tuesday we were just shy of it. Wednesday we were also up there. So 1842 was the high for the week, and Friday's high as well. Now we crashed down as we got that CPI data out of the UK, out of the US. Big worry to markets. So stock markets crashed. Nasdaq was down 2.6%. Stocks fell, yields rallied. We had a big feed of the 10-year yield at 1.68%. That was filled at 1.68%, so that was positive. And gold obviously reverses, the dollar improved. So we went into the 200-hour moving average yesterday on close. Bounced off that this morning into the day's pivot at 1824. Let me just increase that. Into the test today's pivot at 1824. So that's our resistance today. 1820 more of a significant one. Then we've moved back down to the 200-hour again. Bounced off that for now, but we still remain under the 20-hour moving average. So today we continue to drift lower from where we'd been yesterday, certainly. So that's still trending lower, but support is here at the 200 moving average there at 1812. Below that is the bottom of the Bollinger Band. Now they're coming into squeeze. See how the Bollinger Bands have squeezed together? 1810 is the next though. So 1812 is your immediate support. Then it's 1810 at the bottom of the Bollinger Band. Resistance, we need to break and close over the 20-hour moving average there at 1817. So again, oil continuing to trend down, and definitely says Kevin Gagan, good afternoon to you. What trade can we enter on gold? Noreen Dean, I can't tell you what to do with gold, but you can see here trending wise it's moving down. So let's see what the data is coming out. Remember, yesterday was a big shock to the market. It wasn't expecting the spike in CPI that we got, but certainly it was the core number came in at 0.9%, much bigger than expected. It was expected to be 0.3%. So that was a big miss. And we'll see what the PPI, which is the manufacturing producer price index, shows. It's expecting to come in around about 3.7% for the year-on-year basis for April. 3.1% was the March number. So see what that looks like. It's just coming through now, along with the weekly claims number. So let's have a look at that now as that's come in. Where have we gone? So weekly claims are better. They come in at 473,000. So that should benefit the dollar, one would expect. Last week's claims was revised back up. Only 9,000, but it's back over the psychological 500,000 to 507,000. So this week's weekly claims have come in at 4.73%. And again, the other thing that's hit the or would have supported the dollar is that inflation, producer price index year on year, is much more than expected. It's coming in at 4.1% as opposed to 3.7%. So again, it's another lift, this time in producer price index rather than yesterday's, which is the more important consumer price index, the CPI data. But remember, guys, the Fed, as far as the Fed's concerned, the most important measure of inflation that they like to use is the CPE number, the consumer price earnings number, rather than the consumer price index number. So they are more focused on that. But the PPI number, not as significant as the CPI number, but still a significant beat to the upside, 4.1%. So again, you would expect dollar to have accrued. But here, gold here, which is the chart we're looking at the moment, let's go to the 5 minute. Certainly a spike to the high side, 18.20. But you would expect that to perhaps weaken. Let's have a look at the dollar. What's the dollar doing here in the immediate aftermath of the number? So dollar initially slipped, but then we've got sort of a bit of a, initially moved down. Euro dollar initially moved down, but it's moving back up. So euro benefiting a tad there. So dollar a tad weaker. Dollar index itself, let's have a look at the dollar index. Lots going on yesterday and today as well. So dollar index itself has rejected that 80 high from earlier on today, and it's slipping a wee bit in this current hour. If we go to the 5 minute chart, you can see dollar's been particularly volatile, but standing to move lower at 90.60 here. So the data overall is better than expected, really. And the spike in inflation, CPI inflation, just like the consumer inflation yesterday, producer price index, is also to the upside. So overall, that's dollar had obviously a significant move yesterday, and the monthly numbers as well. The core PPI number has come in at 0.7 of 1% as opposed to 0.4 of 1%. So it's what it was last month as well. And the headline PPI is at 0.6%, twice what was expected, but not as big as last month at 1.0%. So it's come down, but not as significantly. So it's not as a big a surprise as the CPI was yesterday. It's still a beat to the upside. So that, again, that should lift the dollar a bit. But here you can see the dollar, well, it's sort of equalising out now. It's back to negative where it was here on the dollar index here. So as I say, as far as gold's concerned, the data's out now. Again, from an hour point of view, let's say 15-minute chart point of view, it's still sort of trending low. It looked like it was trying to go up, capped there by the 50-hour. So it looks like that's moving, a 50 period moving average on the 15-minute. The 1 hour is continuing to the downside. So on the higher hour chart, we need this to close, as I said earlier, the person asked earlier, 18.17 is the 20-hour moving average. We want to close over that if we're going to move over. 18.20 is the key resistance, and then the pivot point is above there at 18.24. So 3 resistance areas to the upside for gold. Support is that 200-hour moving average, which sits at 18.12, and then the bottom of the Bollinger Band there at 18.10. So at the moment, sort of bouncing off this level, but needs to break to the upside on gold. Unique US 30. US 30, big sell-off yesterday, along with all the others. Obviously, the NASDAQ lost the biggest yesterday, 2.6%. US 30 on the 1 hour, well, there we go. There's the 1 hour chart. That remains weak, doesn't it? That's the 1 hour. This was Monday's high here, around about 35,000, and we're down here now at 33,300 this morning. Futures here. So again, another one that's ticking, trying to tick higher, but it tried to do that yesterday, didn't work out. Had a weak Tuesday, a weak Wednesday, and we're down here again Thursday. Support 1 is our support today at 33,320. Resistance is clearly the day the daily pivot point up there at 33,806. But first resistances are 20-hour moving average there at 33,600. So on this 1 hour time frame, we had a good few hours this morning from the bottom here. Wants to break that. These need to cross first. That needs to break on this 1 hour time frame. It's going to move to the upside unique. As far as the higher time frame is concerned, we are here on the daily time frame. Yesterday was significant for the Dow because we closed under the 20-day moving average. So lots of end of day traders would have certainly closed out this long position here from the beginning of March. So we've had March, April, 5 or 6 trading days of May to the upside. Closed out that long day before yesterday on Tuesday, and then perhaps gone short yesterday. Certainly, if you're trading this system, this strategy would have gone short yesterday on the close at 33,000. Well, whereabouts where we are now, 33,500. Well, 33,600. But immediate support is that 50-day moving average. So that's next support for Dow to the downside on the end of day basics. Unique engineering solutions, my friend. So Bernard Mullo, indeed, my friend. And you, my friend. Dash saying good evening. Hope you're well, staying safe. And final question here from Kat saying, what are your expectations for gold, buy or sell? Well, depends on the time frame, obviously. So the daily time frame remains quite robust. Let's go to the daily. Daily time frame remains quite robust, but clearly you can see there we've run out of steam, as I said earlier. We've run out of steam this week around 1842. So we couldn't close over 1842, but Friday, I hope you can see it. I'm sure you can see that. So Friday we tested it intraday. Monday, Tuesday, Wednesday, we're all intraday, all the wicks there, tested it. Significant down day yesterday, but again, as an end of day trader, obviously today's candle isn't complete, but yesterday was perhaps a wake-up call, but you remain long because you haven't closed under the 9 period here since here. We got back in here at the beginning of May, and you're still long. Looks like if we close under 1812, which is that key support level, that would close out your long position if you're an end-of-day trader. The 4-hour traders would have gone short here this morning on this strategy in fact, last night that was at 6 o'clock last night, 1800 hours. You can see the MACD signal line starting to move down, testing the histogram very, very low, gone down. So we've closed under the 20-day moving average, or 20-period moving average here, and moved down. Found support at the 50-period moving average on the 4-hour trade, bounced off that at the moment. So again, just like we said before, we need to break over 1824 for 4-hour traders to take this. Suggests it's going to bounce off that 15 to 8 long, but it's not going to cross the 20-period moving average on the 4-hour until we get to 1830 at the moment. So again, it's all about your time frames, Cat. Down at the lower time frame, same strategy. If we look at the 5-minute on gold, it went long earlier here, having been trending lower. It went long. When was this? About 2 o'clock. It's gone long. Well, a bit before that, 4:13, 4. It's gone long out there. Back in there, so you're still long on this. You got out there, and obviously very volatile in these short time frames with the big news. But 1820 is providing resistance, and again, 15-minute went long earlier, and it's still long to the upside. So again, all about your time frames, Kat. So tell me your time frame. We'll have a look at it in a bit more detail if you like. Let me have a look at if there's anybody on Facebook. See if I can see the comments. Let me just. Right on, thank you. Adnan saying this sounds okay. Thank you, Adnan. I should have looked here. Can hear you properly. Gold will fall down, says Lewis. Hits resistance at 1843 and go down. Well, that's exactly what Lewis says. Exactly, Lewis Johnny there. I can't put your comments on there, but you're right. That's what we just said, haven't we? That 1842. It's certainly on the downside. Can't see MT4. All right, okay. Hopefully you can see. MT4, so okay, so it might be issue with a particular guy. Can you hear? Yeah, so good. Hopefully you can see the charts now, Adnan and others. Adnan, you should be on holiday, my friend. It's a holiday. Enjoy Eid Mubarak, my friend. You don't want to be here looking at the charts. Spend some time with your family. Go away. Go on. Go and have a nice holiday. And I say Eid Mubarak to all my Muslim friends as well. Stay safe, everyone. And I hope you've endured Ramadan. It always seems an endurance Ramadan, but I'm sure it's very, very significant for you all. With the utmost respect to you all. Right, another request. We've got CAD, dollar CAD. Well, what a whack that's had from Cindy here. We're in a major downtrend. Can't really tell that on there, can you? That's a 1 hour chart frame. If we look at the daily time frame, we're in a major downtrend. Nobody can argue with that, really, can we? We've collapsed from 126 here, the middle of April, and we went all the way down to test a new 44 month low here under 120.60. That took us all the way back to September. Let me zoom that up. This is the daily time frame. Yesterday, before we recovered from the inflation data, we went all the way down to under this 120.60 level. 120 is the next big support level. And that, on an end of day basis, Sydney remains very short. Obviously, yesterday we turned around quite aggressively. So if we come down to the 4 hour time frame, found some support here. 4 hour went long, very, very tentative long, still very much against the higher time frame here. Yesterday, after the CPI data, and as you can see, it hasn't really got any oomph to the upside. The candles aren't great. It's moved up. It needs to break the top of the Bollinger Band. It's over the 20 period moving now. It's over the pivot point. But it needs to get out the top of the Bollinger Band there. And R1 for 4 hour traders and the daily traders sits there at 121.65. So still long here on 4 hour, but doesn't seem to have got much lift, has it? We've had quite a move. We've had 200 and odd pips. MACD still obviously below the signal line. Stochastics there rallied up into the oversold, overbought area, come back down. RSI 47 still rising, but tipped down now, so got a bit negative. So it's tipped up against the higher time frame trend of 4 hour. The 1 hour will be a bit more choppy, as indeed it was. Went down, now we went up. It's held over the 20 hour moving average there. Interestingly, we're coming under it at the moment. It's held over the 20 hour moving average since 7 o'clock yesterday, 1900. So after the inflation hoo-ha here, we moved up, but it's starting to test that 20 hour again at the moment. So again, the 1 hour may be looking to cross here and move short at 121.25. So we shall see. I say the data from the US claims better than expected. As a quick of a recap, those of you who are just joining me, 475, 3,000. So a new pandemic low for the week of May the 7th. But PPI, significant beat to the upside, 4.1%, 3.7% was expected for the annual figure. The monthly figures also better than expected, 0.7 of 1% compared to 0.4 of 1%, which was expected for the core, and the headline number 0.6 of 1% compared to 0.3 of 1%, which was expected. But again, both those figures, both the core and the headline PPI number, lower than last month. Last month, the headline was at 1.0%. So not as spiky as the consumer price index yesterday, but still a significant beat to the upside. CAT in, that's not a problem. So 4 hour, I think we talked about the 4 hour CATs, didn't we? For gold, I'm sure we did. If you wanted to have a look at it again, please let me know. Sydney, it's not a problem. That's what I'm here for. Stay safe, my friend. And Mohammed's asking about cable. So cable, pound, that's a Great British Pound, GBP versus USD, United States dollar, Great British Pound versus the United States dollar, also known as cable, because originally there was a big telegraph, still is, lots of cables under the Atlantic Ocean, but a big telegraph cable was laid 100 odd years ago, which provided communication between the United States and the UK. So cable here on the 1 hour, again, a bit of a head and shoulders forming here. So 140 is holding currently from the break of 140 we had on Monday, from the big rally we had on Friday. Remember Friday, we were all the way down here under 138, so huge, 39 in fact, wasn't we? Down here, all the way down here last week, this time last week. Actually, I'll zoom that in a bit. You can see, this time last week, so last Thursday, we were all the way down here. in fact, this is Thursday, wasn't it? The 8th, not the 7th was Friday. 6th, we were all the way down here at 1:39. So we've had a massive rally in cable on the back of the election results for the incumbent Prime Minister Johnson. We went to 141.60 on Tuesday up here after the there we go, 141.65. In fact, now we've been down ever since the dollar's come back to life a wee bit. So big move on the inflation data yesterday. We continue to track lower today into S1 and the 200-hour moving average, which is our big support there at 140.15. Obviously below that, 15 pips below that is the 140. So that's our support zone today. To go back to the north, we're still trending lower, so we're still short on this one. We'd need to break 140.50, a big psychological number again. And at the moment, it doesn't look like, tested it a few times today, it doesn't look like we're getting there, does it, today? But certainly support at S1 and the big line. So big support there, if we could draw that in there. That's a support today. Again, Mohammed, I don't know what time frame you're talking about, but that remains down on the 1 hour. The 4 hour also, this that high we talked about in the week, 141.65. 4 hour went short yesterday after the CPI data here at the close of the 4 o'clock candle last night. And again, it's moved down, but doesn't really want to move down much further. But again, sideways overnight. But again, the 4 hour remains short. And the daily candle also, hang on a second. The daily candle remains long, having topped out on Tuesday, down Wednesday, and currently a bit of a doji candle forming on Thursday's candle, but we can't do anything about that because Thursday is far from close. Support is, as we say, the key psychological 140 level, but interestingly, there's a gap between the close on Friday and the open on Monday. So interesting, that may get filled there, 139.80 zone to S2. So key levels remain intact, and then the 20-day moving average is sitting down there around about that 139.45 level, where my big yellow line is on there. So again, don't know what time frame you're trading at. Indeed, Dr. Hassan, thank you very much for that. Eid Mubarak to all our Muslim friends. Absolutely, enjoy your holidays, guys. It's well deserved, and stay safe, because obviously the pandemic, the virus has no doesn't care religion, colour of skin, how rich you are, how poor you are. It's a virus. It travels around as people move around. So be very careful, my friends. Let's have a quick look at my Facebook questions. No more since Sunny said it's lovely. Oh, thank you for that. Matthew says he can hear me. So there we go. So we've all calmed down a bit now. No more questions since the data's come in. So anything anybody else wants to have a look at? We'll go through the data. So choppy action on euro dollar here. This is the 5 minute on euro dollar, guys. I don't normally trade 5 minute, but as you can see, choppy action in reaction to the news. So, but it's still sort of edging, sort of biased to the upside in that 5 minute time frame, isn't it? From the data. The 15 minute moved over that 50 period there this morning, 4:15, 2:15. So it's still moving to the upside, but again, that 121 has been given up. And we got resistance initially at the pivot point, 120.95, 121 itself. Support for 15-minute traders is 120.78. And then those two levels we looked at in the higher time frames for euro. So any more requests, anybody? Have I missed anybody? Let me just have a quick check. No. So let's have a look. Go through the majors. So dollar yen had this big rally through 109 yesterday following inflation. It's held its gains basically, and we're over and currently holding over 109.50. So today's pivot point is 109.30. 109.50 is a key psychological area, but it's really not going very far after that big rally up yesterday on the 1 hour. 4 hour time frame, again, big candle from the CPI yesterday over 109, which we've been sort of pivoting through for Wednesday and Tuesday. Back to the upside of the week at 109.70 this morning. or yesterday, and still moving up. The daily time frame, big candle yesterday, as you can see on that from the surprise beat to inflation. So again, the 20-day moving average providing support there for dollar yen, and it's still sort of biased to the upside. Having looked to go short there. See how that didn't cross. Looked like it was going to go. So very just under the 20-day, probably, but turned around yesterday on the CPI data. And tomorrow is obviously another key day as well. Simply because we've got the key retail sales data. So retail sales data this time tomorrow. Andrew will be here live tomorrow for the retail sales data. Remember, it's they say the UK or the British are a nation of shoppers, but the Americans are the original consumer kings, aren't they? And 67%, over 2/3 of economic activity in the United States is accounted for by consumer spending. So retail sales makes a significant section of that factor. So retail sales key tomorrow. Let's have a just quick check what's expected tomorrow. Retail sales tomorrow, month on month, expected at 1%, down from the big blowout we had at 9.7% previous month. Retail sales, the control group, which is key because it takes out lots of the variables, is expected to slip actually negative 0.2 of 1%. And the retail sales, taken out the autos in particular, again expected to come in at 0.7 of 1%, down from the big blowout previous last month at 8.4%. Remember, one of the reasons we had a big spike in inflation yesterday, consumer price inflation yesterday from the United States, was the big rise in one-off factors. So second-hand cars leapt up, airline tickets leapt up yesterday. So these are big lumpy numbers which can account for the big spike. And again, it's why a lot of the central banks have been so sanguine about this spike coming and not too excited about it as the dollar was, unlike the commodity. The forex market, where we had this big move down in the dollar. A big move up for the dollar yesterday. This euro, continued to move down. So still to come today, we got a third speech from Andrew Bailey from the Bank of England later on. But before that, an hour before that, at 1800, in about 2 hours' time, 1800 hours server time, 1500 hours GMT. It's Governor Macklin from the Bank of Canada. And obviously the interesting fact about these two guys speaking on the same day is that the Bank of Canada were the first of the big central banks to talk about tapering and actually implement tapering. Remember, they cut their QE by 25%, 100 million Canadian dollars per month last time they met, the last announcement. So see what Governor Macklin has to say later. And Andrew Bailey, as I say, this is the third of his three speeches this week. Nothing particularly new or exciting from Andrew Bailey this week. Obviously, he commented on the performance of inflation. But again, the Bank of England talking about tapering in the future. We had that messy release last Thursday in the data. So not implemented it, but still definitely talking about it, and perhaps come in the June meeting from the Bank of England. So see if there's any more hints in that later on today as well. But at the moment, it's a bit more of a sanguine and sort of tempered response to the jobs data and the PPI data on the dollar compared to what the big significant move we had yesterday. But it's still sort of up from lows. Obviously, the other big moves we had, I'm sure you're all aware, a huge move down, nearly 17, 18% move on Bitcoin yesterday or overnight, as Tesla and Elon Musk said they won't actually take it as payment for their vehicles. Big shake out there on environmental grounds. Always a surprise to me. He was so, knowing how much energy Bitcoin mining consumes, being such a big green company that was so, 100 or 1.5 billion committed to Bitcoin. That's been reversed now. So Bitcoin currently hanging back on to 50,000, obviously we had that big move in Ethereum this week as well, and see if they can hold on to those all-time highs. And the commodity complex is continuing to cool from the all-time highs as well of last week as the dollar improves. But we'll see where we go from there. Let's just have a final look at gold. So there we go. Gold again ran into this 1820 level. So it's pushing higher and bounced off it quite significantly. We're back to 1816, so 400 pip move down, $4 move for gold. On that one, but obviously the big candle was here as the news broke, so it really does need to break that 1820 level if it's going to move higher, and then 1824 on the higher time frame, 4 hour time frame. 1824 sits around here, today's pivot point. And as we said earlier in the week and earlier in this broadcast, 1842 was that rejection that we've been moving down from. So here on the 4 hour, we've got support at the 50 period, resistance at the pivot point at 1824. Next resistance is the 20 period moving average at 1830, and then 1842 to the upside. So if there's no more requests, guys, I'll call this a day. I'll call it a day after 30 minutes. If there's no more requests for any other assets, let's have a look on Facebook. No, there's nobody unless that's not refreshed. Let me just check Facebook. No, there's nobody else on Facebook. So you're obviously everybody's enjoying their Eid holiday, and who can blame them? Who can blame you? Absolutely not. Certainly not me. So take care, everyone. Join Andrea tomorrow for the key retail sales data tomorrow. So PPI better than expected. Weekly claims better than expected. A new pandemic low. So take care, everyone, and we'll see you all again next time. All the best, everyone. Bye-bye.